Hi, I'm Michael Newrock, and welcome to the training lesson Moving Averages Indicator. In this lesson, we're going to go over what moving averages are, what moving averages we use, and how to use them with the Profiteer system, why they're so important. The moving averages indicator accurately represents the average of price over the last set number of bars and indicates whether the price on average is rising or falling. So in the market, or you may read about a moving average, and there'll be different moving averages. Um, Mainly, we're concerned with in this system the number or the period of the moving average. So we use the 7 moving average and the 21 moving average, but you'll see, uh, the 50, like the MA50, which means moving average 50 period, the MA100, and so on. And for example, a moving average 100 or an MA 100 represents the average price over the last 100 bars on whatever time frame it is. So if it's on a daily time frame, then it would be the last 100 days. If you had the MA 100 on, say, the 1 hour chart, then it would represent the average price over the last 100 hours. And the angle is very important here. As well as that, the crossover point, we'll get to that in a moment, of when two moving averages cross each other. But the angle gives you an idea of how supported price is or how much under pressure the price is. The steeper it is, the more inclined it is to be moving in that particular direction. That's the simplistic side of it, but we'll get into it in a little more detail now. So in the Profiteer system, there are two moving averages that we use, the 21 period moving average, or the MA21, and we refer to it as the gray moving average because it's gray. And then we have the 7 period moving average, or the MA7, which we refer to as the yellow moving average, and that's because it's yellow. So here you can see on this little graphic the gray moving average and the yellow moving average. Okay, the yellow moving average being a 7MA or MA7 is faster because it's a representation of just the last 7 bars, whereas the gray moving average is a 21 period. It represents the average price over the last 21 bars. Okay, so when the yellow moving average crosses above the gray moving average, the average price is going up and it is considered that price is being supported. When the yellow moving average crosses below the gray moving average, the average price is going down and it is considered that price is under pressure. So these points are really important. I'm just going to go over it a little more now. Right here, you can see a crossover occur with the 7 moving average, or the yellow moving average, crossing over the gray moving average. Okay, so that is indicating that price is under pressure. Here we can see the yellow moving average, which is the faster of the two, that's the 7MA. The yellow moving average is crossing over the gray moving average. And in this case, we can see that price is being supported. So when the yellow is below the gray, price is under pressure. When the yellow moving average is above the gray, price is being supported. The crossover is the point when the moving averages cross each other. It is this point that provides traders with the opportunity to catch a momentum or a movement from its inception. And I refer to that quite often. What was the inception of the trend? And the inception of the trend, the very beginning of it, was when the moving averages crossed over. Whether it's up or down doesn't matter. Of course, it has to be to have a valid trade setup in the Profiteer system. It has to be in harmony with all the other indicators. But the moving averages, the crossover moving average, is a system in itself and can certainly be used to give you an indication of when the trend is moving or more dominant in one direction or another. So when the yellow moving average crosses above the gray moving average, the price has moved from being under pressure to being supported. So you can expect to look for buys, or that buy opportunities may materialize. When the yellow moving average crosses below the gray moving average, the price has moved from being supported to being under pressure. So hopefully you can see by now, just with the last couple of things we've gone through, the higher time frame, the trend follower, and when you combine the moving averages and the crossover point, that inception of the trend, you can see how powerful the system is. And we haven't covered everything else yet, of course, but that is it's a very popular system on its own is what I'm trying to get at. So the following chart depicts an upward trend with the yellow moving average, okay, above the gray moving average, and it remains above for the entire upward move. So all the time while the yellow moving average is above the gray moving average, okay, gives us an indication, a hint that the market is moving up because the price is being supported. Okay, so as far as we're concerned, the trend is up while the yellow moving average is above the gray moving average, and that is how we determine the higher time frames as well, as far as whether the trend is up or down. Okay, this chart depicts a downward trend with the yellow moving average below the gray moving average. Okay, so it's crossed over and the yellow moving average is now below the gray moving average. And it remains below for the entire downward move. Okay, so we consider for the Profiteer system that a trend is down while the yellow moving average is below the gray moving average. Alrighty, that pretty much covers the moving averages indicator lesson. As always, there's a couple of tasks below this video, and there are also some FAQs as well, plus a link to the forum, the specific section that relates to the information that we've covered in this lesson. So, until next time, good trading, live well, and I'll see you soon.